Be Wealthy and Smart, episode 1027.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to ask, is it time to sell stocks? Because all across social media, people were saying, oh, should I sell? There was a lot of panic going on. The Dow dropped almost 1,000 points on Friday. Here's what I know. When I see a lot of that emotion being stirred and people asking if they should sell, that tells me we're very close, if not at the bottom. Usually people are exactly doing the wrong thing at the wrong time. And what I mean is our emotions hit a maximum peak or a maximum low, if you will, right at the time when things are about to turn. When you're thinking about selling because the market's down, you're looking in the rearview mirror. You're looking at what's already happened. What you want to do is look forward and say, where are we going from here? Which is why I always try to give you a forecast of where the market's going so you have some peace of mind and it helps you hold through the volatility a little bit easier, perhaps. And you know, I've been extremely bullish in some of my forecasts about what's coming up soon. That in May, there's going to be some major good news, like a potential peace deal between Russia and Ukraine, like the fact that interest rates are not going to have to go up like the Fed is jawboning that they're going to do. They're saying over and over again that they have to raise rates and raise them quickly, and that is scaring the bond market, which is scaring the stock market. So these kinds of things that are being projected out there are what's causing the turbulence. But in my research, it's not looking like this is what's really going to happen. It looks like this is a head fake to me. And that things are about to turn around in a major way. And we're going to have a major boom in the stock market that people aren't expecting. If you didn't listen to my podcast about 7 reasons why I'm bullish, go back and listen to that because there's a lot of positive things happening and there's a lot of contrarianism that you should be having because most people are very negative right now. In fact, 81% of people think we are going to have a recession, which I also don't agree with. When you look at the guidance that's coming out from the companies, that's their forward-looking numbers. The guidance is strong and the numbers are good. When you look at the profitability of companies, the profitability is good. When you look at the job market is strong. It's gone from hot, as some people say, to just hot. But the job market is still very strong, and anyone who wants to find a job pretty much can get one at a pretty good wage. So the consumer is having income, and the spending has stayed fairly strong. It's just that inflation has gotten out of control and is running at about a 15% rate, not the 8% that they're telling us, but the real rate, when we look at the real numbers, the way they used to be calculated, apples to apples, it's about a 15% inflation rate. So we're seeing food get a lot more expensive, gasoline, rent, housing, etc. But all of the things that continue to make the stock market look good are looking strong to me, and particularly in technology. Now, we've had some tech stocks that have been surgically having some issues. That means instead of just the entire NASDAQ, which hasn't done great, I mean, it is down 17.83% year to date. But there's been certain companies within the NASDAQ that have gotten hurt worse than others. Companies like Netflix, which have just fallen out of bed and have had some serious problems. But not all the tech stocks have had issues, and many are going to be turning and taking off, I think, a lot higher, such as Amazon and Tesla and Google. Those three we've been following in terms of their stock split. That still looks really good to me. I think those are going to get a boost because of that. But also there's other tech companies that are going to have really good earnings. Once the Fed meets and we don't have the interest rate hikes the way that they've been saying we will, the market is going to realize it's priced in interest rates too high. The Fed isn't going to hike the way they said they were. Then we're going to have some sort of peace agreement, hopefully between Russia and Ukraine, which is going to surprise the market a lot. Oil prices are going to come down. It's really going to start turning everything right at the end of May. So things are about to turn. We've probably seen the worst behind us. Certainly the bottom looks to me like it's already in, and we've been coming down to take a little bit of a correction again, but we're not even anywhere near the lows. So we're not really testing the lows because we're still way above where the lows were. So to me, we're just taking a little bit of that froth away, and the stock market is set to eventually take off again. Now, we could have some more volatility. It might go back down to test the lows, but everything looks really strong to me for us to have a full recovery and new highs in the stock market in May, into June, and beyond. So this is not the time to lose heart. I've also talked in the past about how we get a strong rebound after we get a sharp correction. So the worst time to sell is at the bottom of the correction. You definitely want to stay in and get this sharp rebound where you can recover massively from what has corrected. So you can make up, sometimes 5 or 10% quickly just on the rebound. So you want to stay in for the strong rebound that's coming. Now, the one thing I haven't talked about is silver, and we got huge news on silver last week. We got news that the London Metals Exchange is going to stop trading silver in July. That went under the radar. Not a whole lot was reported about that. It just sort of appeared on Twitter. And I didn't see anything other than the usual suspects of those of us who are interested in silver talking about it. But that is enormous because it's telling us that that market is broken, and there's acknowledgement that that market's broken. And the reason that market's broken is because the banks have been forcing the price of silver down for years, and that's to protect their fiat currency. As you know, I believe we're in the middle of a change to a new financial system, and it's already underway. And this is just one more confirmation of that, and the fact that the old system wasn't working and we're moving into a new system. Now, they haven't said what they're going to do in place of the London Metals Exchange, so we'll have to wait for the details on what's coming next, because we really haven't been told. But what we do know is silver is very rare. It is rarer than gold. We know it's used in a lot of technology. We know that phones and computers and solar panels, etc., use silver. And because the mines stopped mining, the mints stopped minting, it's getting harder and harder to come by. So secure your silver coins. You definitely want to hold those in your possession and secure those while you can. I don't know how long we're going to have access to be able to get physical silver. It's going to be, I think, more and more difficult, especially with the London Metals Exchange shutting down. The one thing I know is that before we have a big spike up, we usually have a big spike in the other direction. So I've been predicting a big spike up for silver this year. So before we see that, we will get one spike on the downside, which will give you a great buying opportunity. But we don't worry about the short-term movements of silver. We just hold through it for the long term. Silver is going to break free this year, and the London Metals Exchange closing down is just another sign of that this is a serious change in the silver market, and that silver should be finding its true market price this year, because $25 an ounce or thereabouts is not the fair market value of silver. It's much, much higher than that. So if we see a spike down in silver, you can expect soon to see a price up that continues and continues until silver finds that true market value. This spike down in the stock market right now is because I think we're going to have a massive rebound rally. So hold firm through this. And remember this statistic. According to the Morningstar Direct Fund, a $1 million investment in the S&P 500 about a decade ago would be worth about $4.3 million today. So the long-term view is always what we want to take. This is not the time to sell. It's the time to hold strong through this, diamond hands as they say. Things are about to get a lot better, but don't let an outlying move down, sharp and quick, change your opinion about what's coming in the future, because we have some higher markets ahead for silver and for the stock market, in particular, technology stocks. I'd like to remind you that all of my podcasts are available on my website at lindapjones.com/podcasts, where you can enter anything in the search box to find a topic that you're interested in knowing more about. I call it my wealth mentoring library because there's all kinds of permanent topics, things like creating a wealthy mindset or what your asset allocation model should look like, how to purchase silver. All of that can be found on my website at lindapjones.com. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.